Okay, so who wouldn't love to turn like $1,000 into $5,000 by
Right.
2030?
Yeah.
It sounds almost too good to be true, right?
It does.
But what if I told you
Yeah.
it's entirely possible with the
Okay.
right knowledge?
Yeah.
That's what we're going to be digging into today, using this article from The Motley Fool, published just yesterday, January 18th, 2025.
Oh, wow. Hot off the press.
They picked 3 stocks
Okay.
that they believe have that 5x growth potential.
Interesting.
And we're going to kind of unpack their reasoning.
You'll love it.
Even if you're not about to drop thousands on stocks,
Right.
understanding their logic is like a masterclass
Yeah.
in spotting opportunities, no matter what market you're interested in.
I agree. You hit the nail on the head.
Right.
It's all about developing those analytical skills
Yeah,
so you can make informed decisions
exactly.
instead of just following someone else's picks.
Yeah, just blindly following, you know.
Yeah, exactly.
So let's dive in.
Okay.
First up is a company I bet you know,
Okay.
Amazon.
Yeah.
But hang on.
Yeah.
I can already hear you thinking,
Mm-hmm.
Amazon, isn't that stock already massive?
Right. It's huge.
Yeah.
But the article goes beyond their e-commerce dominance
Oh,
and points to a different growth engine.
Interesting.
Amazon Web Services, or AWS.
AWS, the cloud giant. I knew
Yeah.
it was a big deal.
Huge.
But this article digs into some numbers that are pretty mind-blowing.
Oh, absolutely.
Yeah.
Last quarter, AWS brought in over 60%
Wow.
of Amazon's operating income,
Really?
and that number keeps climbing.
Jeez.
Think about it.
Yeah.
This isn't just about selling you that random thing you needed 2 days ago.
Right.
It's about providing the infrastructure
Yeah.
for countless businesses online.
So even though Amazon's already this massive company,
Great.
they've tapped into
Yeah.
another massive market,
Absolutely.
cloud computing. That's still growing like crazy.
It is.
That's where the 5x potential comes in, right?
Precisely.
Okay.
The global cloud computing market is projected to grow
Yeah.
at over 16% annually
Really?
until 2030.
Wow.
According to Mordor Intelligence.
Okay.
That kind of consistent growth,
Yeah.
even on top of Amazon's existing size,
Right.
makes their prediction a lot more believable.
Okay, that makes sense.
Yeah.
But I'm already thinking,
Huh?
is this too much of a good thing? Are we putting all our eggs in the AWS basket here?
That's a great question.
What happens if something disrupts that market?
Uh-huh.
Or AWS suddenly faces
Right.
some fierce competition?
Yeah, and that highlights a crucial point.
Yeah.
While AWS represents
Yeah.
a significant portion of Amazon's value,
Okay.
it's always wise to consider diversification
Right.
and the potential risks
Yeah,
associated with any single segment of a company's business.
for sure.
AWS is dominant now,
Yeah,
but things change fast in the tech world.
for sure. It's like a reminder to never get too comfortable, right?
Absolutely.
Okay, on to stock number 2.
All right.
Iovance Biotherapeutics.
Iovance.
This one's been a wild ride.
Oh, yeah.
Tons of hype a few years ago.
Yeah.
Big crash.
Mhm.
And now, who knows? It's like a financial mystery novel
Yeah.
waiting to be solved.
For sure.
Well,
Well, let's break it down.
yeah, let's break it down.
Iovance is in the biopharma game,
Okay.
focusing on a very specific type of cancer treatment,
All right.
tumor-infiltrating lymphocyte therapy,
Wow.
or TL therapy for short.
DL therapy.
Yeah.
Got it.
Their star product, Lifelicel,
Okay.
got FDA approval back in February 2024
Oh, wow.
for treating melanoma.
So back then, investors went wild
Oh, yeah.
for this breakthrough treatment,
Absolutely.
but then boom, the stock crashed.
Right.
What happened?
Well,
Did the science not hold up?
not exactly.
Okay.
The science is still solid.
Okay.
And the FDA approval proves that.
Okay.
But the initial investor reaction,
Right.
that was probably more hype than anything else.
Oh.
You know how it goes. Sometimes
Yeah.
the market gets ahead of itself,
Right.
especially with promising biopharma companies.
Yeah. So it's like everyone was expecting overnight miracles.
Right.
But developing new treatments takes time.
It does.
Lots of trials,
Yeah.
regulatory hurdles.
Absolutely.
But here's where it gets interesting.
Okay.
The article mentions that Iovance is finally seeing
Yeah.
some actual sales figures.
That's right.
They pulled in nearly $60 million in revenue
Wow.
just last quarter
Okay.
in Q3 of 2024.
That's amazing,
This isn't just potential anymore.
right?
It's a real product
Yeah.
generating real revenue.
Real money.
Okay, so they're proving they can deliver,
Yes.
but their stock hasn't bounced back to
Right.
those early highs.
Uh-huh.
Is this where the opportunity lies?
That's the million-dollar question.
Yeah.
And here's some fuel for that thought.
Okay.
So Credence Research projects that the entire TIL therapy market
Okay.
will grow by almost 40%
40%.
annually
Wow.
until 2032,
Jeez.
reaching a whopping $2.5 billion.
$2.5 billion.
If Iovance is an early leader in this space, as the article suggests, they're in a prime position to grab a big chunk of that growth.
Oh, wow. Those are some serious numbers.
They are.
I'm already thinking,
Okay.
are we seeing a classic case,
Maybe.
a market being slow?
It's certainly something to consider.
Yeah.
Sometimes the most lucrative opportunities are the ones where the market sentiment hasn't caught up with the true potential of a company.
All right, you've definitely got me thinking.
Good.
Time for stock number 3.
All right, let's hear it.
And this one might sound familiar.
Okay.
It's Roku.
Roku?
They had that huge pandemic boom.
They did.
Followed by a steep drop. Now it's like the market's just forgotten about them.
Right.
But the Motley Fool clearly disagrees.
Well, the pandemic definitely gave Roku a boost, as everyone was stuck at home streaming everything under the sun.
Right.
But that subsequent drop,
Yeah.
well, it doesn't tell the whole story.
Okay, so what's the story the Motley Fool is telling?
They're highlighting Roku's continued dominance in the North American connected TV market.
Okay.
According to Pixelit, they still hold a 37% share.
37%.
Which is significantly larger than any competitor.
Wow.
That's a powerful position to be in.
Right. They're still the top dog.
They are.
Even after that stock dip.
Right.
But didn't they have some issues?
And profitability?
Weren't they losing money?
You're right.
Yeah.
Their lack of profitability has been a concern for investors.
Right.
But here's the key point.
Okay.
The Motley Fool emphasizes Roku is laser-focused on North America.
Okay.
Which happens to be where the most growth in the streaming market is expected.
So they're playing it smart.
It's like they're playing chess.
Right.
While everyone else is playing checkers.
That's a smart move.
Yeah.
Double down on your strengths and ride the wave where the biggest growth is happening.
Precisely.
Okay.
And while profitability is a valid concern, the article points out that their financial projections suggest they'll be back in the black.
Back in the black.
By 2026.
Okay.
With even more growth beyond that.
So even though they're not making money hand over fist right now, they seem to have a clear path.
They do.
To profitability while still dominating their market.
Exactly.
Okay. I'm starting to see the bigger picture here.
Good.
Sometimes it's not about chasing the hottest stock of the moment.
I agree.
It's about understanding the fundamentals, recognizing the potential, and maybe, just maybe, getting in before everyone else catches on.
That's the essence of smart investing.
Yeah, I think you're right on the money with that one.
I try.
But hey, let's not get too carried away.
Okay.
This Motley Fool article is just one perspective, a snapshot in time. Before anyone rushes out to buy these stocks, we need to dig a little deeper.
Absolutely. It's crucial to do your own research.
Right.
To look beyond the headlines and understand the nuances of the market.
Yeah. We've unpacked the Motley Fool's reasoning.
Right.
But there's always more to the story.
There is.
Right? That's why we call this the deep dive.
Yeah.
We're going beyond the surface and looking at things from multiple angles.
Right.
And for our listeners, I think this is a great reminder.
Okay.
Even when an article makes a compelling case, it's just the beginning of the journey.
It's like getting a taste of something delicious.
Right.
It makes you want to savor the entire meal. To explore all the flavors and ingredients.
Right.
And that's what we're about to do.
Okay.
We're going to take a closer look at each of these companies, examining their performance since the article was published, and see if their story is still as compelling as the Motley Fool suggests.
Right.
Buckle up. It's going to be a fascinating ride.
I'm excited.
Me too.
Let's do it.
Okay.
All right, so we've got our 3 contenders, Amazon the behemoth with a surprising growth engine, and AWS Iovance the biopharma underdog with the potential to revolutionize cancer treatment, and Roku the streaming king betting big on North America. But remember, that Motley Fool article we discussed was just a snapshot. Things change fast. So let's see what's happened since then. First up, Amazon.
Yeah. The Motley Fool was really bullish on Amazon Web Services, and for good reason. Their cloud computing platform is dominating right now. But here's where it gets interesting. Have you seen the recent reports about Microsoft Azure closing the market share gap?
Oh, yeah, I saw those. Microsoft's been making some aggressive moves in the cloud space. They've got some serious momentum, especially with government contracts. I'm thinking back to what we talked about earlier, the risk of relying too heavily on one part of the business. Is this a sign that Amazon needs to watch its back? Could this slow down their path to that 5x growth?
That's the question, isn't it? AWS still holds the lion's share of the market, but Microsoft's gaining ground.
Yeah.
And let's not forget Google Cloud. They're also a major player in this space. It's getting crowded at the top, and competition often leads to price wars and shrinking margins. It could definitely impact Amazon's profitability.
So it's not as simple as just assuming AWS will continue to dominate unchallenged. There are other sharks in the water now, and they're hungry. This is a perfect example of why doing your own research is so important. Okay, let's shift gears and talk about Iovance. They've got that promising TIL therapy for melanoma, but what's happened since the article came out?
Well, they've released their Q4 2024 earnings report, and the numbers are intriguing. They beat revenue expectations, which is a good sign. They pulled in over $70 million in revenue for the quarter, bringing their total annual revenue to over $200 million. That's pretty impressive for a company that was barely generating any revenue just a year ago.
That does sound promising. It seems like their treatment is gaining traction, but remember, the article also mentioned that the market for TL therapy is expected to explode in the coming years. Has there been any news on that front?
There's been a really interesting development here. Remember how we talked about Credence Research projecting a market size of $2.5 billion by 2032? Well, a new report from Grandview Research just came out, and they're projecting an even bigger market, closer to $3 billion by 2030.
Wow, that's a huge jump. It seems like even the analysts are having trouble keeping up with the growth in this field. Okay, so Iovance is exceeding revenue expectations, and the market for their treatment is expanding faster than anyone predicted. On the surface, it looks like they're on track for that 5x growth, right?
It certainly looks that way. But here's something to consider. Have you looked at their spending? Their research and development costs have skyrocketed, as have their marketing and administrative expenses. They're burning through cash at an alarming rate.
So even though they're bringing in more money, they're also spending it even faster. That makes sense. They're trying to scale up production, run more clinical trials, and get their treatment in front of more doctors and patients. It's a classic growth company dilemma. Spend big now to reap the rewards later. But it does add an element of risk. What happens if they run out of money before they reach profitability?
That's the big question. They're going to need to raise more capital soon, either through debt financing or by issuing more stock. Both options have their own downsides. Taking on more debt increases their financial risk, and issuing more stock dilutes the value of existing shares. These are things potential investors need to weigh carefully. It's not just about the potential for growth, it's about the financial stability of the company.
This is getting really interesting. It's like a high-stakes poker game. Iovance has some amazing cards, a groundbreaking treatment, a rapidly growing market, and impressive early revenue growth, but they're also playing aggressively, and there's a chance they could overplay their hand. Okay, let's move on to our final contender, Roku. What's been happening in their world?
Well, remember how the article highlighted their dominance in North America? Turns out that dominance might not be as secure as we thought. Have you heard about the new partnership between Samsung and Netflix?
Hold on, Samsung and Netflix, what are they up to? I thought Samsung already had their own smart TV platform. Why would they partner with Netflix?
That's the interesting part. Samsung is essentially giving Netflix prime real estate on their smart TV platform. They're pre-installing the Netflix app on all new Samsung TVs and giving it a prominent position on their home screen. They're even developing a dedicated Netflix button on the remote controls.
Wow, that's a huge win for Netflix. But what does it mean for Roku? I thought they had a pretty tight grip on the North American streaming market.
Well, that grip might be loosening. Samsung is the world's largest TV manufacturer, and they sell a lot of TVs in North America. By giving Netflix this preferential treatment, they're essentially making it easier for consumers to bypass Roku altogether. Why bother navigating through a separate Roku interface when you can access Netflix directly from your TV's home screen?
That's a good point. This could definitely eat into Roku's market share. And remember, the article was banking on Roku's North American dominance to drive their growth. If Samsung and Netflix start chipping away at that dominance, it could throw a wrench in their plans.
Exactly. And this is a reminder that competition can come from unexpected places. We were so focused on the battle between Roku, Amazon Fire TV, and Google TV that we forgot about the wild card, the TV manufacturers themselves. They have the power to control the user experience on their platforms, and they can make strategic decisions that could shake up the entire streaming landscape.
You know, this whole deep dive has been an eye-opener. It's amazing how much can change in just a few weeks. We started with these 3 stocks that seemed like surefire bets for 5x growth, and now, well, it's a lot more complicated than that.
That's the beauty of the market, isn't it? It's constantly evolving, always throwing curveballs our way. It keeps us on our toes, forces us to think critically, and reminds us that there are no guarantees.
I couldn't have said it better myself. So for our listeners out there, I think the biggest takeaway from all of this is never stop learning, never stop researching, and never stop questioning. The market is a dynamic, complex beast, and the only way to navigate it successfully is to stay informed, stay adaptable, and stay curious. We started this deep dive with a Motley Fool article highlighting 3 stocks poised for 5x growth by 2030.
Yeah.
But as we've seen,
Right.
things aren't always as straightforward as they seem.
Yeah, for sure.
Those initial picks sparked some great conversation.
Absolutely.
But digging deeper
Right.
revealed a whole new layer of complexity.
It's a great reminder that investing is more than just reading an article or picking stocks.
Right.
It's about understanding the companies, the markets they operate in,
For sure.
and the forces that can drive their success or failure.
And honestly, I think that's what makes it so fascinating.
Yeah.
It's a constant learning process.
Absolutely.
It's a puzzle that's always changing.
Exactly. We've seen how new competitors can emerge.
Right.
How market projections can shift.
Yeah.
And how even the most dominant companies can face unexpected challenges.
So for our listeners out there,
Yeah.
I think the key takeaway here is don't just take our word for it.
Right.
Or the Motley Fool's word for that matter.
Exactly.
Use this deep dive as a springboard for your own research.
Absolutely.
Dig into those financial reports.
Yes.
Read industry analysis. And follow those news updates.
The information is out there,
Right.
and it's more accessible than ever before.
For sure.
The key is to develop that critical eye,
Yeah.
to learn how to sift through the noise
Right.
and extract the insights that matter most to you.
And don't be afraid to challenge those assumptions.
I agree.
Even the ones presented in seemingly authoritative articles.
Nice.
Ask those tough questions.
Absolutely.
Explore those alternative perspectives.
Yes.
And ultimately make your own informed decisions.
Because at the end of the day, it's your money,
Right.
your investments, and your future.
I love that it's about taking ownership of your financial journey.
Exactly.
And who knows, maybe in your research, you'll stumble across an even better opportunity
That could happen.
than the ones we discussed today.
That's the beauty of the market.
Right.
There's always something new to discover.
Yeah.
A hidden gem waiting to be unearthed.
And that's what we hope to inspire with the deep dive. The sense of curiosity, a thirst for knowledge, and a passion for exploration.
I love it.
So keep those minds engaged, those questions coming, and those deep dives going.
Because the more you learn, the more you understand.
Exactly.
The better equipped you'll be
Yeah.
to navigate the complexities of the market.
For sure.
And achieve your financial goals.
And on that note, we'll wrap up this deep dive.
Awesome.
Thanks for joining us. And until next time. Keep
exploring.
Sounds good.